One of the big four banks have come out and they've predicted that interest rates are going to cut far beyond what you and I actually believe. Now, this could be really interesting, and I want to dive into how this is going to affect property prices, but also your borrowing capacity. And if you're interested in what my thoughts are around what the other banks are thinking and where I think this is all headed, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, if you are interested in knowing how the Trump tariffs are going to affect the Australian housing market, definitely bookmark this video. You can watch it after this one and it'll bring it all together. Now, let's focus in this video around interest rates, interest rate predictions, and what that could mean for you and I moving forward in the next 18 months. I'm going to go through what the big four banks are saying and why they are saying it. And what's crazy is an interest rate cut like this could increase your borrowing capacity by almost 25%. Is that all going to translate into property prices? Are the banks even going to pass them on? Well, let's deep dive into a few things. As we know, the RBA likes to cut or increase rates by 25 basis points. That's usually a normal cut or an increase. What we're seeing is the market predicting that maybe in May, we're going to get a double cut, which means a 50 basis point cut. And while you might be thinking this is not possible because inflation is still a problem, well, guess what? I said a few months ago on this channel that inflation is no longer a problem. We are heading one way. If the RBA doesn't pivot, we're going to find ourselves in deep waters. Now, we have seen the tariffs come out and that's going to negatively affect the world economy. And that's why we're starting to see a lot more movement in the interest rate discussion. Now, what we are seeing here is the market expectations of an interest rate change at the next RBA board meeting, which happens to be coming up in May. Now, what you can see here is the trading day, no change, and then decreased to 3.6%. Now, currently we're at 4.1%. And this number or this table really changes on a daily basis. And what we were seeing a couple of days ago was a decrease to 3.85%, which would mean a 25 basis point cut. But now it's changed to 3.6%, which means the likelihood of a 25 basis point cut is pretty much guaranteed. And the next thing is now looking at how big of a cut it's going to be. Is it 25 basis points or 50? And what we can see as of the 9th of April, there was a 100% chance that if the meeting was held on that day, it would cut by 50 basis points. Now, since then, we've seen it sort of slow down and it's gone as high as 79% and as low as 70% as of recording this. Now, what you can see here is the interbank cash rate futures implied yield curve. This usually gives you a bit of an idea of where the market thinks the interest rates will be in the next sort of 12 to 18 months. And what you'll usually see is the higher end up the front and then it sort of tapers off. But as we go through this rate cutting cycle, what you will start seeing are the columns towards the end start coming in. It's almost like a wave before we have a massive wave at the beach. So what we'll see is this entire area start moving in, and you'll probably see this closer to about 2.2 to 2.4, whereas right now it's saying 2.875. Now what you do see is cut after cut after cut after cut after cut after cut after cut. So based on this, we're looking at a sub 3% interest rate according to this. Now currently we're at 4.1%. So the market is sort of forecasting that we're going to see at least 100 basis points cut from where we are now in the next sort of 6 to 12 months. But let's see what the big four banks are saying and we're going to bring it all home together. Now, CBA is predicting 3 rate cuts. Westpac is also thinking 3 rate cuts, and they believe that the cash rate will be closer to 3.35% by the end of this year. Now, ANZ is also thinking 3 rate cuts, but probably not a double rate cut at some point. So they're thinking 3.5%, whereas NAB has come out and said something different. And they've changed their mindset on where interest rates are headed, and they've taken a really big stance on this. Here's what NAB is predicting. What they are suggesting is in May, which is the next meeting, they're going to decrease rates by 0.5%. Then following July and August, we're going to see another 50 basis points with 25 at each meeting. Maybe a pause in September. November, they're going to have another cut. Then December, we pause, and then Feb, another 25 basis points. So that means effectively we could go from 4.1% all the way down to 2.6%. Now, for context, 100 basis points is 1% interest rates. So if we see 1% dropped of your mortgage, what does that actually mean for you? So it's a really easy way to remember this. For every $1 million of debt you have, 1% interest rate cut means $10,000 worth of savings. It works the opposite way as we increase. So on $1 million, if it goes up by 1%, you're paying an extra $10,000. So according to NAB, if this actually plays out, In less than 12 months, saving over $15,000 for every $1 million worth of loan that you have. Now, if you have a lot of debt, and let's say you've got $5 million worth of debt, you would then multiply that number by 5. So if it's 150 basis points, it's $15,000 for each million. So that would mean $15,000 times 5, which would give you a saving of about $75,000. And this is how the filthy rich become filthy rich, because they go and accumulate when interest rates are high in the hope that interest rates will either fall or the rents start increasing. And what happens is you now find yourself in a position where you would be generating, if you are neutral cash flow today, you would be generating an extra $75,000 worth of income. Now, where this gets really crazy, the really successful property investors are thinking, how much is this going to affect my borrowing capacity? And on about 1%, you're increasing your borrowing capacity by up to 15 to 18%, which is crazy to think what 1.5% would actually do, because that's closer to about 20%. So if we hypothetically see an increase in your borrowing capacity by 20%, it means that everyone that's sitting on the sideline now has an opportunity to get into the market. Now, before you get really excited, it may mean that property prices move a lot faster as well. And what happens with things like this is that as the sentiment changes, people front run this. And we saw this when interest rates started increasing. You saw a lot of people start putting brakes on when they saw the first interest rate increase and maybe the second. That's when they started realizing, okay, maybe interest rates are gonna go up and they're gonna go up for the near future, which means now I'm gonna slow down, I'm gonna have my emergency funds and I'm not gonna spend as much. And what that led to was a slowdown in price growth, and it meant that some areas like Sydney and Melbourne actually went down. Now, what we could see is the sentiment change, which is happening right now. You'll see an increase in demand, and if we expect that interest rates might fall between 75 basis points up to 150 basis points within the next 12 months, it means this concept of a property super cycle could actually play out. It could mean that property prices could go much, much higher, especially when FOMO kicks in. Now, I'm going to make a video on this channel about the property super cycle, what I think about this, and bring it all in with the Trump tariffs and what's happening in the global economy with inflation. If you're interested in that video, comment down below saying super cycle and subscribe by hitting that notification so you're ahead with that information and you can act the fastest. I hope you guys have enjoyed this video. If you have, smash that like button, subscribe if you haven't already, and I'll catch you guys in the next one. Thanks, guys.